Welcome to iGlobal Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you very much for joining me. The Australian dollar has now plummeted more than 10% of the yearly highs when it began at 81.35, and the market has not been able to show any kind of stability in the last 5 to 6 days in terms of bullishness, with the overnight now crushing the support of 73.75. It now exposes the region of 73.20 to 72.55. With the low being 73.46, the market will be looking towards that region again, which was last posted in May 2017. Due to the immediate risk of the oversold conditions, I do expect to see the current sell-off soon to reach a point of short-term exhaustion. Therefore, this could in terms stage a rebound. However, with the Australian being a commodity-based currency, the commodities did worsen overnight, and that was with silver and gold setting off. Could see another bout to the bearishness today, with the immediate support coming in at 73.65, which so far has been respected this morning, and the resistance is now seen at 74.15. Overnight, the euro took another heavy bout of pressure after slipping towards the lows around the 115 region. The market got trampled heavily as the US dollar rebounded shortly after the European Open, and the market looked from a low of 94.15 low, to 94.92 high, and it's currently trading at 94.66. There is one fact to take to consider, is although the US dollar has been staging some significant bullish moves over the last few days, it still needs to clear 95, and since the last 3 or 4 attempts failing towards that region, still questions whether the US dollar has got the momentum to show the next impact to the upside and into the downside on the euro. But nevertheless, the technicals are still bullish, and a break above 95 would give us a view to 97 to 98. The dollar index, as some of you may not know, is weighted against the greenback strength of a traded weighted basket of 6 major currencies. And with the euro being 57.6, if we see a break above 95, this would be the catalyst to see a further fall beneath 114.85 and expose the region of 112.80, which is what I'm calling at the moment. Resistance seen at 116.40.50 on the day. The dollar-yen case, unfortunately, has not been able to recover as well as I hoped. But that being said, it did rebound off the 109.60 level after posting a low briefly of 54 before rebounding back to 110. So a good 40-point bounce, and at this stage could see a further increase if this momentum drive continues, and therefore looking towards a target of 110.55 to 111.15. So my view yesterday was pretty much a rebound of 109.60, so we did get that, so that was pleasing to see. The sterling's not a pretty picture, as it still continues to be weighed upon from the bears as the pause push further overnight through 132.10 and now look towards the region of 131.50 or maybe down towards 130.85, which I stated in the report. A couple of things to note is the market is preparing for the Bank of England's rate decision tomorrow, and it's widely expected that Mark Carney will come out with a slightly mixed statement, purely for the fact is that he has been for quite a while now been holding a dovish tone since the start of the highs of 143.77 back in April and dismissed any rate hike, and therefore the pound has now posted low 130.149. It could be a game changer though if Mark Carney does come out to be a bit of a hawkish tone. So let's see what the statement says tomorrow at 9 PM Sydney time, when the rate decision is expected to be released. Later on Friday, Mr. Carney also will be speaking at the Mansion House speech, where he will probably be a proactive driver for the pound if the speech is widely watched for clues around what the Bank of England is expecting on the UK economy. So keep an eye out for that as well. On the day, though, I expect to see a range of 131.50 to 132.10. Now, as I said, gold did take a bit of a hit last night and tumbled all the way towards the low of a 6-month low of 1,270. I was hoping, though, from Friday's sell-off that we would get a rebound. But after plummeting $26, $27 on Friday, the market has not been able to recoup any of its momentum and takes further casualties to now expose the region of 55.60 possibly. We are getting oversold and a little bit overheated on the ADX, but nevertheless the pattern is still appearing quite bearish. On the day, 71 to 78 as a short-term range. Silver is looking now towards the region of what I expect a base at $16.15, with a support seen around that level of $15.25. I do anticipate a market will be bullish from this base, as previously seen over the last few months. And to wrap up with oil, well, the market did slip away from its recent gains from the previous day, and also to note that my target from the flag gives us a measure move to $62.4080, which I believe the market will be challenging. From a technical point, still looks bearish, so I do anticipate a further weakness. One thing to note, though, is the market is preparing itself for tomorrow, when we've got the oil ministers from OPEC, Russia and other producing countries, which will take place in Vienna on Thursday and Friday to review their current production agreement. So let's see how that all plays out as well. So that will no doubt make the oil slightly put in a wider range than what we've been seeing over the last few days. Nevertheless, I still expect to see 62.4080 before taking profit. Well, that wraps up for today. Thank you very much for joining me. And as always, look out for the intraday report. And I hope you do enjoy the rest of the day that's ahead.